The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Live from Studio 2 here at Bloomberg headquarters in New York, I'm Katie Greifeld. Happy Friday to you. We're kicking you off to the closing bell here in the U.S. Here's a check on what markets are doing right now. You can see the S&P 500. It's not at session lows, but certainly we've seen some of those losses come back in as we count down an hour until the bell's down about 0.9%. And here is where the weakness is coming from. The Nasdaq 100 off by about 1.2%. The Philadelphia Semiconductor Index, where all your chip stocks live, down about 1.2% as well. That index actually poised for a bear market, so keep an eye on that. And we're also, of course, watching Brent as we continue to monitor developments in the Middle East. Brent about 4% higher at the moment, trading just below $88 a barrel. Meanwhile, let's take a look at some of the individual equities today. Some news for Apple reclaiming its spot as the world's most valuable company, surpassing Nvidia. Apple shares up marginally on the day, but that looks pretty good in a down day for nearly everything. SpaceX, meanwhile, wiping off about $1 trillion worth of value. You can see now it's $10 or so below its IPO price, down another 4% today. And also Netflix, of course, reporting after the bell yesterday. You can see not exactly those results being embraced by the broader markets. Netflix shares down about 7%. Let's kick things off on this Friday with Mimi Duff. She is Senior Client Advisor over at GenTrust. I'm pleased to say she joins me here on set. Mimi, great to see you.
Thanks for having me.
There's a lot going on. Let's talk a little bit about the unwind that we're seeing specifically in the chip sector, because, you know, for a while it was a story that we were comfortable with. Supply constraints that's pushing up chips across the board, but particularly those memory chip makers. It seems like that story has really started to reverse just in the past few weeks.
Yeah, I think that's right. Like, the momentum is really coming out of the sales there. There is a good amount of leverage from the retail crowd, especially if you look at levered ETFs in combination. There is a good deal of leverage, so a decent amount of room to come out right now.
That's something I've been wondering, you know, even just from a sentiment perspective. You think about what's happening in South Korean markets in particular, which, you know, mainly just means Samsung and SK Hynix at this point. But how much is that sort of feeding through into what's going on when it comes to U.S. markets?
I mean, certainly in those sectors, in the hyperscalers and in the chip manufacturers, I think it's really all related. Those were the fastest ones up. I think that when we're seeing some wind come out of the sales, we're going to see that deflate a little bit faster.
And beyond just the chip makers, of course, and the chip sector, you have the broader tech universe sort of asking a lot of existential questions right now. When it comes especially to AI, CapEx, we're starting to get closer to some of those updated figures from the Magnificent Seven, a cohort which really haven't done too much year to date. And I wonder, you know, as we sort of ask these questions and watch this momentum reverse, how are you thinking through the Mag 7?
Yeah, so we actually have hedges on the Mag 7. We've been big believers of diversifying away from the Mag 7. We've got the top 10 names in the S&P are close to 40% of the index. So we think that the broader markets will outperform as you're seeing more AI implementations. So, for instance, you pointed out the Mag 7 hasn't done much this year. The ex-Mag 7, the mid caps, the small caps, the equal weight, the foreign equities, they've all been beating the Mag 7 this year. So we think there's more to run there.
And it's a fair point. I mean, there's plenty of places to look right now. But at the index level, even if we watch that broadening out continue here, if you don't have, you know, the 7 largest names or so in the indexes participating in this rally, what can we expect just at the index level?
Yeah, I think we're not overly concerned at the index level. Right now, CapEx related to AI is about 2.5% of GDP. These are not small numbers, right? And they are fueling a good amount of growth. The last jobs number was a little weaker, but we're just really not seeing that much weakness on the broad economy right now. So, and very early days in this quarter's earnings, but the banks have really been shining stars so far.
Yeah, absolutely. You think particularly about those equity trading numbers really sort of blew it out of the water here. You mentioned that, when it comes to other parts of the market, sectors that might be implementing AI, those are some of the places where you can look, you can actually see some outperformance. And I'm wondering what sort of spots you're picking and choosing here.
Right. So we've got our eyes on biotech and defense and quantum. We're really looking for good ways to implement those themes, and we think that those could be multi-year themes that could benefit in the coming years.
Talk to us about how valuations play into that, because even with the Mag 7 lagging, the whole story this year has just been about AI. And are there any actual bargains outside of the tech sector?
Well, I think that that's part of the reason why the mid caps and small caps have been doing better this year, right? So, and then if we look at like the commodity space, the services space, like these non-AI affected, then you should see less volatility there. As long as the economy can hang in, they should do okay.
Well, speaking of the economy, something else that we saw this week was certainly a revival in crude prices, in Brent prices. The situation in the Middle East remains as unpredictable as ever, but certainly you've seen those prices come back. How does that potentially factor into this conversation?
Well, on the margin, we do continue to hold real assets as an inflation hedge. That's energy producers, gold, uranium we've got in the mix. So given the amount of uncertainty that you just pointed out, and it seems like every other day we're going back and forth, so that's a core part of our portfolios, and that's providing some hedge against the volatility there.
All right, Mimi, always great to see you. Appreciate you stopping by. That is Mimi Duff. She is Senior Client Advisor over at GenTrust. A little bit of breaking news here when it comes to SpaceX. You can see shares trying to erase some of their losses right now. This is the headline coming from the Wall Street Journal that SpaceX is in talks to provide computing power for the Pentagon. SpaceX shares down by about 2.5% right now, had been down closer to about 4%. We'll continue to follow that story. But coming up on the close, the battle for the top spot. Craig Moffett of MoffettNathanson joins us to talk about Apple fighting it out with Nvidia as the world's most valuable company. Plus, Netflix's growth pains. Simon Gallagher, he's a former executive at the streamer. He joins us on the back of a tepid third quarter forecast. And the World Cup finals just around the corner. BetMGM CEO Adam Greenblatt stops by to discuss the betting boom around the tournament. All that and more coming up. This is The Close on Bloomberg. Well, sticking with tech, bonds issued by hyperscalers to fund the AI build-out starting to drag on investor portfolios. Data from Bloomberg showing that the debt has been underperforming on nearly every metric. Our next guest is out with new research showing that this onslaught of debt, it doesn't yet risk hitting single issuer limits that could hinder life insurers from buying up more of those bonds. Nathaniel Rosenbaum, he is head of U.S. high-grade credit strategy over at J.P. Morgan. He joins me now on set. Nate, it's great to see you.
Likewise, great to see you again. Thanks for having me on.
Let's talk a little bit about what we're seeing when it comes to the spread level, because you think about all of this massive issuance from the hyperscalers, you're starting to see it sort of underperform a little bit. Of course, we made a lot of hay with that Amazon offering recently, which got a little bit of a cooler reception. And when you add it all together, how much of this is just the technical factor of there's a lot of supply coming through versus maybe fundamental reasons being behind this?
So I think the technicals are leading the charge here. And you're right, it has clearly underperformed. When you look at the hyperscalers as a cohort, they're trading at about 140 basis points, which is the widest they've ever traded, and about 60 basis points wider year over year, while the market overall is actually unchanged. So they've underperformed a lot. The question here is that justified or not? And I think investors have created this narrative, if you will, that demand, especially from insurance companies, is already maxed out, and yet we're staring at perhaps trillions more. And that's where I think there's, a little bit of uncertainty.
Well, let's do some potential myth busting here, because you pointed out in recent research that, okay, you have U.S. life insurers. They hold about 25% of U.S. corporate bonds. They generally have single issuer limits of about 3%. And it sounds like your view is that they're not exactly hitting those limits just yet.
Yeah, I think investors look at the high-grade index and see these issuers, moving up very quickly. And the largest one now, Amazon, right around 1.5% of the index, and thinking, okay, we're getting closer and closer to those issuer risk limits. I think from the insurance company perspective, the way they're looking at it is as a portion of their entire asset pie, not just that corporate credit slice. And so that 1.5% shrinks to something a lot smaller when you look at it from their perspective. And so I don't think it's a matter of risk limits. I think it's, do I want to lend to this hyperscaler at the current spread? Or am I better off waiting for perhaps billions or trillions more to come, which may come at wider spreads? And so that's a different consideration.
Right. So if this technical sort of drag on these new issues continues, maybe you'd be better off waiting for 4 months from now when they tap the market again. Exactly.
And I think the problem is, and what we hear from investors is, if only I knew that there was going to be a cadence, I could figure this out. It's the lack of a cadence, the unpredictable nature of this issuance that's really sort of upsetting the market, upsetting issuers. And once they figure out a cadence, I think the market will readjust.
Well, that's what I was going to ask. Do you expect some sort of pattern to develop? Because you think about financials, for example, the big banks, they issue big bonds after earnings. Could we see something similar develop when it comes to these hyperscalers?
I think we're going to get there eventually. I think, as time goes on, we'll probably get there. The difference between the banks, because that's usually the precedent that's cited, the banks when they were doing their TLAC issuance back in 2016 and onwards, when they were doing it, their spread mattered a lot because it was about 80% of their coupon that they were paying at the time because we were in a zero rate environment. You fast forward to today, it's the exact opposite, right? Your spread for these hyperscalers is only about 20% of their coupon. So they don't necessarily sort of care as much about where spreads are and if they have to pay a little more. They care more about rates. And you had a rate rally at the end of the quarter. And so some hyperscalers looked at that and said, this is a great time to fund. I'm going to hit the market, even if it means it pressures my spread somewhat. So it's that dichotomy that's, I think, driving a little bit of stress in the index at the moment.
I do want to talk a little bit more about concentration risk because, okay, when it comes to insurers, you make the good point that you think about things holistically, maybe that 1.5% weighting that Amazon holds, maybe it's a lot smaller than that. But, I mean, if you zoom out from that and you think about just investors overall, it feels like concentration risk is more broadly becoming a conversation, a concern. You think about the equity market, for example. We know it's very top heavy. It's very tech focused. The tech sector traditionally has not issued that much debt. There's been a massive sea change just in the past year or so. I mean, how much do you think that could actually become a factor here, where investors, even if they don't have specific limits here, maybe they just don't want this much allocation to tech?
Yeah, I think that is increasingly a consideration. Like if you look at our market at the end of last month, tech surpassed U.S. banks as the biggest sector in the market. So when investors look at that, it starts to cause some consternation. And then when they try to assess, like, what is my risk to AI sort of as a factor within my portfolio, that's obviously growing very rapidly. What I would sort of question there is, at what point does AI become so embedded in every single vertical of the economy that you no longer look at it as a factor? Am I overweight AI? Am I underweight AI? Right? You're just simply long credit. The way folks are long the financials, right? For example. And so we're not there yet, but I think we're kind of heading in that direction where you can't ignore it anymore. And so it becomes less of a sector, underweight, overweight, that I need to actively manage.
Right. It's just sort of this omnipresent theme that sort of touches everything. Before I let you go, you mentioned that, you think about set spreads in the tech sector starting to widen a little bit, but the overall market is unchanged. Do you think in the months ahead that we could start to see the widening that we're seeing in tech actually make a difference when it comes to some of these blue chip indexes?
I think as we move forward here, there's potential for a little bit more weakness at a broad market level. August is typically a pretty bad month for spreads, and then we set up for a heavy calendar into September. So perhaps the rest of the market bridges a little bit of the gap to hyperscalers. But by and large, the investor base is treating it as like almost two separate markets at this point. I'm going to trade my hyperscalers here and the rest of the market here. And so they don't necessarily inform each other all that much. But I think we could trend a little bit wider, but we're starting to get to a zone where investors start to see a little bit more value, particularly at the long end. Long end spreads have widened dramatically, say, versus the municipal market, where long end spreads are actually tighter because their supply is down year on year. And so there is some relative value starting to emerge in our market, but we're perhaps not there yet.
Not there yet. Nate, that's a great place to leave it. Great to get some time with you. That is Nathaniel Rosenbaum. He is head of U.S. high-grade credit strategy over at J.P. Morgan. Now, coming up, Apple emerging as a safe haven as tech faces what our next guest calls, quote, a laundry list of cross-currents. We'll unpack the stock's big day with Craig Moffett. He is senior analyst over at MoffettNathanson. This is The Close on Bloomberg. Time now for our top calls. Look at some of the big movers on the back of analyst recommendations. And first up, we have Circle. Mizuho out with a new street low price target down to $50 from $85. The firm cutting the stock to underperform from neutral on increasing stablecoin competition, raising concerns that new rivals could weigh on profitability over the medium term. Shares slightly down. Next in line, we have Ford. J.P. Morgan raising its price target on the automaker to $16 from $15, saying that earnings should beat estimates. The firm staying overweight the stock, flagging, quote, potential for upside driven by lower costs and growth in key parts of the business, including services. Shares higher on a down day. And finally, we have Apple. HSBC upgrading shares of the iPhone maker to buy from hold, lifting his price target to $366 from $260. The firm stating Apple is now at an operational turning point and is well placed to leverage its user base thanks to upcoming improvements to Apple Intelligence. Shares pretty much flat on the day, and sticking with Apple, it's duking it out today with Nvidia in today's trade as the two battle it out for the title of the world's most valuable company. Joining us live is Craig Moffett. He is Senior Managing Director and Senior Research Analyst over at MoffettNathanson. He covers Apple with a neutral rating and a $270 price target. Craig, great to have you with us. So it feels like the stars are aligning for Apple, which I think is really interesting because it was less than a month ago that, we were talking about how higher memory chip costs were really going to dent demand for smartphones. Apple actually came out and said it was going to raise prices on Macs, iPads, and home prices to counter that memory shortage. But the stock has been on an absolute tear since. What's going on?
Well, hi, first, thanks for having me, Katie. I think that what you're seeing is, to some extent, the reaction to things like Nvidia. The two are not independent. When you see volatility rise in the rest of the Mag 7, and particularly in the chip and memory complex, that volatility is typically met with an appreciation of safe havens. And I'm not sure that the rally in Apple is quite so much a reflection of rising optimism for the fundamentals as much as it is that it's viewed as a much safer play at a time of uncertainty around the kind of returns you're going to get from the AI trade.
And talk to us about why it has sort of developed that safe haven sort of quality. When you think about, the turbulence that's sort of undertaking the rest of the Mag 7, why does Apple sort of stand apart from that narrative?
Well, the irony is that it's actually behind in AI, but it's behind in AI in part because it has chosen not to invest. Its investments typically come more in the form of R&D than they do in CapEx, but its investment in AI relative to its Mag 7 peers, Mag 8, I guess, if you want to include SpaceX now, it is quite modest, right? And I don't think anybody would argue with the basic premise that we're still going to use a smartphone as the primary device for consuming AI. There are plenty of pretenders to the throne and lots of people talking about alternative form factors, but most of that feels a ways away. So Apple, in one sense, is sort of insulated from all of the debates about AI. It's going to be fine one way or the other, whether it's its own AI, whether it's using Google, or whether people choose to go to an app to use OpenAI or Anthropic. Either way, or in any of those outcomes, you're still going to be using your Apple device. So Apple feels like a relatively safe choice when you don't know who's going to win these really, really high stakes and high capex wars.
Yeah, absolutely. And the fact that Apple, has also sort of held itself back from those capex wars, certainly really becoming a little bit of a benefit in the past few weeks here. So you mentioned that, you think about this performance that we've seen from Apple over the past month. Perhaps it has more to do with what's going on with the rest of the Mag 7 and Apple looking like a safe haven here. But let's talk a little bit about their fundamentals because, okay, they're behind arguably in the AI race. We know there is some enthusiasm about Apple Intelligence. We know that we have the foldable phone coming up on the horizon. What sort of catalysts are you looking at when it comes to what could keep this momentum going?
Well, they really do have what sounds like a very strong product pipeline coming, not just with the foldables, which are the most exciting, but also quite expensive part of the product lineup. But the product lineup sounds quite strong. But think of the crosswinds that you're seeing here, right? Which is partly because of the spike in memory prices, the smartphone market is experiencing a rather significant pullback right now. Apple is too, particularly in markets like China, where sales are believed to be down fairly significantly, but interestingly less so than peers. So is it good news that they're gaining share, or is it bad news that volume is decelerating? You have that kind of push-pull in almost all aspects of the Apple story right now. And in some ways, that's actually a good setup. There really aren't any giant surprises coming. So people feel like it's a place where they can park with some certainty while you wait to see what happens with some of the volatility in the rest of the market.
All right, Craig, really appreciate the breakdown. That is Craig Moffett. He is Senior Managing Director and Senior Research Analyst over at MoffettNathanson. We're keeping an eye on shares of Apple and, of course, their overall market value just below $4.9 trillion, neck and neck with Nvidia. We'll see how that race shapes up in the next 34 minutes. But coming up, Netflix shares sinking after reporting a slowing growth sales forecast. Former Netflix and Hulu executive Simon Gallagher, he joins us next. This is The Close on Bloomberg. Netflix shares down mightily after yesterday forecasting a second straight quarter of slowing sales growth. Now, it's a lack of new hits and worse retention for later seasons of existing shows that are really weighing on the streaming giant in the first half of the year. And let's unpack a little bit of what's going on with Simon Gallagher. He is former content acquisition executive at Netflix and Hulu, now managing director at SPG Global. Simon, great to have you back with us. So you think about why Netflix is down about 26% year to date, and it really gets back to that engagement issue. Investors are concerned that viewers aren't as engaged with the content that Netflix is putting out. And, I wonder when it comes to yesterday's figures, whether you saw anything that would suggest that those fears are maybe a little bit overblown.
The market always overreacts to this sort of news. They pointed out an interesting point on the conference call yesterday that 6 of the top 10 sign-up days over the last couple of years have been tied to live sports. So I think that there is engagement challenges, there is engagement leveling off, but they're measuring engagement on number of hours. They're not measuring engagement in number of subscribers that are watching an individual piece of content. And certainly that the embracing of live sports is certainly something that seems to be resonating with the existing subscriber base globally.
What do you make of their approach to live sports? Because the argument is out there that the way that, they're investing with it and approaching it, it's not enough to get the avid sports fan. It's more the casual sports viewer. So I wonder how you think about how they're positioning themselves in a very competitive market.
You're 100% right. A very, very competitive market. And it's a little bit of a toe in the water approach. But I think they're moving very diligently. They have an exceptionally strong corporate strategy team that would be well aware of the audience figures for every sporting event around the world. And so they're trying to do a little bit of cherry picking at the moment just to work out exactly what works for their audience and also what works for their production teams if they need to produce the coverage of the sporting event. And I think at the moment it's going okay and it's improving, but it's certainly got a ways to go yet.
Yeah, absolutely. It'll be interesting to see, how much traction they are able to get. But when it comes back to that engagement question, I wonder at what point this tips into an advertising conversation right now, because sort of the rallying cries of, people who are so bullish on Netflix shares is that you take a look at their advertising ramp up. They put out that $3 billion figure that they're on track to hit. That outweighs in the more, bear or bullish view that outweighs this engagement talking that we're talking about. But at what point does this tip into something that could threaten that advertising business?
Look, the advertising business last year, roughly $1.5 billion, on track for $3 billion this year, but still so far behind where YouTube is at with their advertising business at $60 billion annually. So there's a lot of potential upside. And I think that this is what the market is maybe not giving enough credit to in terms of the opportunity to grow the revenue numbers directly from the advertising. And we also saw something last month that maybe didn't get as much market noise as I anticipated in terms of some of the shorter form content that, again, Netflix is doing a toe in the water approach with partners like Condé Nast to put 3 to 20-minute clips, almost YouTube type video and content on the platform. So they're certainly starting to look at that. What other content can we provide to our 330 million subscribers around the world? And you're seeing that creep towards certainly YouTube type content. And there's an opportunity for them to, the agreements that content creators and short form content creators are signing with YouTube are non-exclusive agreements for the most part. So there is certainly an opportunity for some of that content to bleed onto Netflix. And I think that's going to be a really interesting space to watch in the coming 12 to 18 months.
Well, Simon, it's an interesting point. I wonder how much of that comes back to sort of the form factor of how Netflix content is consumed, because the point has been made that, Netflix is losing to your phone, that a lot of people are consuming this short-term content on your phone. And you think about, for the most part, people consume Netflix content on their TV or on their laptop. It's not necessarily on their phone. So I wonder, how far that sort of short form strategy can run, given that they're fighting the actual device here.
Absolutely, and they're very well aware of that, and they know that they're losing the audience during the day when people are at work or are commuting to work. And so that's why, again, this toe in the water approach with some of the short form content, I think you're just going to see more and more of it. And if they wanted to get to the point where they had 50% of the content that currently sits on YouTube, they could absolutely do that. Because as I say, the short form content creators would love to have an alternative, would love to have a second place for their content to live, would love to see more engagement on and not give YouTube so much leverage over their businesses. So I think they would, the content creation community would really embrace a second alternative in Netflix, but it's something they're moving softly on because they don't want to dilute that subscriber revenue number.
Absolutely. And Simon, something I'm so curious to get your thoughts on, given that, you were formerly head of content acquisition over at Netflix, is the fact that there is this second season slump narrative that has formed around the company in general, that they're having trouble retaining viewers into later seasons of shows, even if the first season, is a success by most measures. And I wonder, whether you think that narrative actually has legs, whether there's truth to it. And if so, how do you combat that?
Look, they're trying a lot of different things across a lot of different genres, and you don't always know. Maybe you have a successful series, but the content creators, the writers, the showrunners don't necessarily have a strong story arc for season 2. Maybe they weren't prepared for that, and then all of a sudden they are in season 2. Maybe they were rushed to season 2 and they didn't expect to be in production as quickly as they anticipated. So there's certainly some challenges there, but again, the media likes to point to the negativity. They're not talking about the shows that have gone to 4, 5, 6 seasons of content. I think there's even one at 7 or 8 seasons on Netflix. So they've got a lot of successful hits. No, not all of them make it past the second season. Yes, a lot of them do lose that audience, but they're still, when you compare them to other media platforms, I still think they've got a pretty strong batting average.
And I would also love to hear your thoughts on whether or not Netflix needs a deal at this point. You know, the M&A question has been hanging around Netflix for a while now, and for, you know, the past year or so, or certainly in the past few months, it was seen more as a nice to have. And certainly you saw a lot of folks happy that the Warner Brothers acquisition fell through here. But do you think at this point that is a deal, an acquisition of some sort, is needed at Netflix?
No, I never liked the Warner Brothers deal. I like deals like the Lionsgate opportunity even less. There's nothing that I don't think they can create for significantly less money than going out and doing one of those acquisitions. You know, they can go and license the IP around some of these marquee films or TV shows that are at Lionsgate or other places. And so, you know, nice to have, but absolutely not worth it at the price that they would have to pay. I suspect they're probably looking at some sports leagues. That might be something that they could acquire an entire league, but that would be significantly less cost. And I think you'll just see them continue to focus on how can we drive more money from the, you know, how can we pull some of that $60 billion in annual revenue that's going to YouTube? How can we bring some of that across and raise that $3 billion number at Netflix?
Well, Simon, really appreciate your perspective. That is Simon Gallagher. He is managing director at SPG Global and former content acquisition executive over at Netflix and at Hulu. Now, still ahead, we'll talk about Yum Brands falling on a parasite outbreak tied to produce. We'll unpack all the action in today's Stock of the Hour up next. This is The Close on Bloomberg. Our Stock of the Hour today is Yum Brands. Shares of the Taco Bell parent down today by about 2%, with U.S. regulators now linking the spread of a parasite outbreak to shredded iceberg lettuce. Let's discuss with Michael Halen. He is senior restaurant analyst over at Bloomberg Intelligence. Michael Halen, it's great to have you with us. So, I mean, you think about the movement that we've seen in shares of a lot of these different salad chains. We know that Sweetgreen has had a very volatile week. What do you think this actually means sort of long term for these companies, or medium term, if you map out the different scenarios here?
Yeah, long term, we think it's kind of much ado about nothing. You know, we're not too worried about this freak out we've had this week, and we think a 10% decline in Yum Brands shares kind of sets it up for potentially a nice buying opportunity. You know, with the sale of Pizza Hut, their top and bottom line growth is going to grow pretty nicely over the next 12 months or so. You know, in the short term, could there be a minor sales loss here in the third quarter? Potentially, right? But the last Cyclospora outbreak that we know of, that we looked into, is McDonald's, right? And McDonald's in 2018 had an outbreak that actually hospitalized 24 people, impacted over 500. You know, their sales were not really impacted much at all. You know, and in this case, for a few reasons, we expect any impact to be short-lived, right? So first of all, Cyclospora is not fatal like E. coli is. It was due to the supplier and not due to food handling issues at Taco Bell. And lettuce just isn't meaningful to their sales, right? And so for those reasons, we think it's been largely overblown at Yum Brands. We don't cover Sweetgreen, but obviously they sell a lot of lettuce. So if people pull back on their lettuce purchases, on their salad purchases, that's going to hurt them in the third quarter.
Yeah, just anecdotally, I did eat at Sweetgreen on Monday and Tuesday. I did not eat at Sweetgreen today or yesterday, but I'm just one woman. But I was going to ask you what gives you the confidence to say that, because I mean, we've heard from the FDA telling Bloomberg News we don't have any foods that folks should avoid at this point, but we anticipate continuing to see cases increase possibly through the end of August. But it sounds like what you're saying is that if you take a look at previous outbreaks of, you know, this and other things, that provides some sort of roadmap here.
Yeah, listen, this is very different than something, say, like norovirus, which shows up very, very quickly, right? Cyclospora sometimes takes 2 weeks to get a diagnosis, right? So it's very hard for people to know exactly what they ate 2 weeks ago that caused this pathogen, right? And so, and the absolute numbers are pretty small, right? We're talking about, you know, I think 1,600 cases due to Taco Bell, right? Compared to some of the numbers we've seen in the past. You know, it's high, but in terms of absolute number, it is not very high. So Like I said, Cyclospora has not been an issue for restaurant chains in the past. We don't expect it to be one here.
All right, Michael Halen, great to get some perspective, some context with you. That is Michael Halen. He is our senior restaurant analyst over at Bloomberg Intelligence, talking us through some of the movement that we've seen in the salad stocks this week as we continue to track that parasite. Meanwhile, you take a look at the broader market right now, the S&P 500 down about 1% as we, of course, try to close out the books on this week. That sell-off in tech certainly dragging everything down. We're going to break down all the action coming up next with Kim Forrest. She is founder and chief investment officer over at Bokeh Capital Partners. This is The Close on Bloomberg. Welcome back to The Close. I'm Katie Greifeld. We're less than 10 minutes away from the closing bells on this Friday. Here's where we stand. It's not too pretty when you take a look at some of the big benchmarks here. The S&P 500 down about 0.9%, and the next two lines tell the story well. I mean, you have the NASDAQ 100 off by about 1.3%. We know a lot of those big tech names are coming under pressure. So, too, are a lot of the chip makers, as measured by the Philadelphia Semiconductor Index, down about 1.1% at the moment. This was the hot spot in the market for quite a while now, but we've started to see that reverse and start to crumble over the past few weeks. Meanwhile, we take a look at Brent. It's been a big geopolitical week as well when we track what's going on between the U.S. and Iran. Brent currently trading at about $87.62 a barrel, higher by about 4% on the week. Let's try to make sense of some of the action with Kim Forrest. She is founder and chief investment officer over at Bokeh Capital Partners, joining us on this Friday. Kim, it's always great to see you. And let's unpack what we're seeing right now, because you think about where the weakness is in the market. It's, coming from the companies that have spent a lot on this AI build out. And it's also coming from the companies where that money has been funneled to, the chip makers. When you add it all together, do you think that this sort of rotation that we're seeing has legs, or is this just, strange summer trading?
Let's see. I'm thinking it's a little bit of both, but mostly strange summer trading. And here's why. If you look at how the hot, semiconductor stocks traded in the last quarter, it was out of, it was just crazy hot. You couldn't pay enough for Micron. You couldn't pay enough for, a lot of stocks. You just wanted to own them, whoever that trader was, right? And now nobody, it seems, wants to own them. They've come back very, very quickly, a little bit because of some information that came out of China. But then also earlier this week, IBM's big announcement had a lot to do with the chilliness, I'll say, around AI. But, especially today, you can tell that there's 10 people on the trading desks, and that's it. There's 10 of us out there, because it's just weird today.
Yeah, absolutely. Just judging by my commute this morning, it was pretty sparse on the rails. But let's talk a little bit about that AI news that we did get out of China. Of course, you're talking about that new AI model coming from Chinese startup Moonshot, said to rival the best offerings from OpenAI and Anthropic. That's a big reason why you're seeing Nvidia come under pressure, since, both of those companies, those stateside companies, use Nvidia chips. This feels like, a mini DeepSeek moment, if you want to call it that, because the existential question here is, I guess, whether this heavy spending that we're seeing on AI, whether or not we're basically overspending.
Well, I'm sure we are. It's just a matter of magnitude, right? But these tremors that come out of China, a lot of them are, seen stealing minor players kind of walking through. And why do I say that? Well, I guess there are people using DeepSeek. I'm pretty sure Palantir and other companies that are, getting people to pay actual money for access to the Western models, we'll call them, are unwilling to trade their, company information and put it in the hands of, people that have a history of not being quite honorable with other people's data, we'll say. So I mean, data is really important, and I think that at the end of the day is an issue. Now, whether or not this model is going to hold up, and again, has China somehow supplanted Nvidia in making the fastest chip? We'll not know for a while. I have a feeling that there's probably a good number of Nvidia chips floating around in China, perhaps. So I don't know. This is a lot of news that people are reacting to that doesn't necessarily have hard facts assigned to it.
And of course, we'll have to see how we open up on Monday, maybe when more folks come into the office and we've had a weekend to digest some of this news. But I mean, you think about some of the single stock stories that we've seen this week. It's not just, of course, the chip makers. You think about IBM, for example. That was really interesting. The idea that, you know, their customers are basically shifting spending. They have to pay up for servers. They're not as interested in IBM and what products they have to sell. Kim, I wonder whether we're going to see more of those types of stories as we get deeper into the earnings season.
I think we will, but and people are going to go and say, oh my gosh, this is the .com collapse all over again. And it kind of is and it kind of isn't. One of the big reasons is there aren't a whole lot of public companies that are in the enterprise space that dominate like IBM does. I mean, they own the global 2000. The 2000 largest firms in the world use them. And I think we're making a mistake by thinking those global 2000 are going to continue to spend in their regular AI department just like, you know, normal and add AI spending to it. And I think that's a really bad idea. And IBM is going to have to talk about that next week, about where the spend is coming. You know, is it going away from IBM, or are they just delaying and they're going to roll out their AI offerings through IBM? I think that's a really big question.
Yeah, it's a good point. It's going to be interesting to see what additional detail we get from the company next week when they do report earnings. They were sort of pre-releasing a lot of the bad information, and certainly we saw the stock react when you think about some of the levels that we reached. But Kim, I mean, you think about, you know, all of the volatility this week, the dispersion that we're seeing underneath the hood of the index. Are you seeing bargains open up right now? And if so, I mean, where are you sort of picking your spots?
Sure. Well, I am seeing bargains because when new accounts come on, I wasn't buying them when everything was, you know, priced up, we'll just say. So I'm beginning to see where these gems are settling. And one that I think I can talk about that I'm looking at and I own for some accounts, not all accounts, is Synopsys. You know, are we never going to design another chip again? Apparently, that's what the people who are selling that company and Cadence are thinking. And I think that's probably a not great idea.
Okay, so Synopsys, one on your watch list there. I mean, what areas of the market do you think some of the pressure that we're seeing is justified? Where would you be sort of staying away from, or at least casting a skeptical eye at?
Sure. Well, the memory stocks, right? I mean, they just flew up earlier this year so far, so fast. And it's really unclear as to what the true demand is. Not all memory stocks are created equal. Micron makes very different products than SanDisk does, and Western Digital, and, you know, SK Hynix. So you have to be very discriminate about buying in that area. It's just really a very complicated area. So you have to get your engineering hat on and take a look and see who might be worth what they're, you know, currently at. So, and I think that's true of all technology. You can't just indiscriminately buy tech. You must understand what you're buying and where it fits in the role of AI.
And Kim, one quick question before I let you go. It's the obvious one. I mean, you think about that SK Hynix U.S. listing just a week ago. Is it possible that we look back and say that's the moment that the bubble burst?
Could be. I mean, it really looks like there was that could have been the moment, right? And again, is it just for the broad makers of NAND and DRAM? Or is it just very specific areas only 6 months will tell, right? In 6 months, we can look back and say, aha, that's what happened.
All right, Kim, always great to talk to you. Have a great weekend when you get there. That is Kim Forrest. She is founder and chief investment officer over at Bokeh Capital Partners. Meanwhile, we're counting down to those closing bells. We've got just about 30 seconds to go until we close the books on a down week for the S&P 500. Looks like we're going to finish down about 0.9% off session lows, but still quite a chunk taken out of the index on this Friday, this summer Friday, I must point out. Meanwhile, you take a look at the NASDAQ, losses worse there, down by about 1.4%. The Dow relatively outperforming, down about 0.8%. When you think about the breakdown of the S&P 500, you had about 140 names or so finishing in the green. There were a lot of stocks moving to the downside, more than 350 names to be exact. Nvidia taking the biggest chunk out of the index. But let's take a look at the sector breakdown as well, because it's really interesting. As we were talking about that bad breath extending to the sector level, to the IMAP, you can see a whole bunch of red on the screen before you right there. Only one sector managed to actually finish in the green today. That was energy, higher by about 1.2%. Everything else finishing the day with losses, led by communication services, down about 2.4%. Consumer discretionary shares down about 1.6%. Let's break down all of this market action with Bloomberg's Michael Ball and Jess Menton. I'm pleased to say both of them in the office on this Friday, July 17th. I want to start with you, Michael, because you think about what has sort of developed when it comes to momentum and some of the highest flyers reversing, taking the whole market down with them. What are you seeing when you take a look under the hood?
Yeah, look, momentum, high beta momentum, which is sort of the go-to basket right now, is down over 30% since only a couple of weeks ago. Today was interesting because it actually was down right out of the open and it came back to be positive, but eventually the sort of the weight of oil rising and the overall risk-off tone eventually made it fall and hit the red to end the day. But it was a positive development because it showed there might have been a little bit of a capitulation. And we're on an OPEX day, meaning an option expiration day, so maybe some positioning cleared. And it was very negative positioning, particularly in all these AI CapEx prior winners. Some of that might have come off. We'll have to wait and see where the new positioning rolls or what the kind of Monday data looks like.
Well, just let's talk a little bit about positioning, because I know you've been tracking, Michael Hartnett over at Bank of America, and it sounds like basically things were just looking a little bit too bullish, that rubber band had to snap at some point.
They do have a bull bear indicator at BOVA that they put out in the flow show notes every Friday that I'm sure it's pretty widely followed. So once again, it kept pushing higher, once again above 9.5, but it's actually been above that 8 level, which basically has been more extreme positioning since mid-May. So it's been a couple months now that you've seen that. And then also the S&P 500, even despite everything going on, the rotation we've seen in chip stocks, still only about 2% off its all-time high. But if you look at the NASDAQ 100, it's about 6.5% from its record not that long ago in June. And of course, the stocks down about 20% from that record high on June 22nd. But you still saw some bright spots within some of the chip makers like Skyworks. Of course, Apple is one of its biggest customers, and we did see Apple higher again today. So still that rotation going on where people are more focused on micro right now, heading into more of earnings, of course, next week with Google and Tesla and Intel, rather than more of what you're seeing with the macro.
Yeah, next week is certainly going to be jam-packed, and it's going to be interesting to see how that sort of lands in the midst of this rotation, because you think about what we're seeing just in the AI trade. You have the hyperscalers really falling right now. You have the chip stocks falling right now, and I feel like a lot of that just traces back to that CapEx conversation.
I mean, these have been the winners for most of the year. They're now funding this rotation on better growth expectations. The inflation data took immediate Fed hiking fears off the table, which helped. All eyes still on oil. That's going to be lurking. That's why maybe de-risk into the weekend, because we don't know what events are going to come. But generally speaking, the macro backdrop outside of the geopolitical risk has been sort of Goldilocks, where we don't have too high inflation, growth isn't going to force the Fed's hand, and then you can go sort of into the more cyclical parts at the expense of sort of the secular side of the AI trade, which had been holding up during the Iran war a lot better than many expected. So this kind of does make sense in a lot of ways. Things got stretched in one trade, and now that's funding sort of a broadening of another trade.
Yeah, and I was joking with Kim Forrest that maybe SK Hynix, maybe we'll look back at that moment and say that's when the memory bubble burst. But you think about SpaceX, for example, the superlatives we're getting there, wiping out about $1 trillion in value, well below its IPO price at this point. It feels like a lot of that enthusiasm is being drained right now.
And not even just with SpaceX, but we were just talking about SK Hynix as well, briefly dropping below that 149 price level that we never did go public, which was just about a week ago, but then it still closed up above that around 154. But even if you look at some of the like Cerebras just a few months ago that went public and some of the smaller ones like Fervo, they still are trading now below where they ended up going public. And so that's something that's interesting, just watching the dynamic of a lot of the excitement for a lot of these either AI related type names coming to the market, but a lot of them underperforming recently too.
All right, guys. Well, great to walk through some of the action with you on this Friday. It certainly was a turbulent week, and I'm glad to say the markets are officially closed. That is our own Michael Ball and Jess Menton talking us through, again, some of the day's biggest moves. And coming up, we're going to switch gears a little bit, and we're going to talk about the business of the World Cup. We'll be speaking with BetMGM CEO Adam Greenblatt on the betting boom that we've seen during the tournament. The conversation coming up next. This is The Close on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. I'm Katie Greifeld. Let's take a look at where markets closed out on this Friday, the final trading day of a very volatile week. You can see the S&P 500 finishing about 1% lower. A lot of that weakness coming through when it comes to big tech, as measured by the Nasdaq 100, off by about 1.5%. It's the Philadelphia Semiconductor Index that really sold off hard into the close just in the final few minutes of trading, finishing the day down by about 1.6%, actually officially entering a bear market, meaning it's now down about 20% from its peak. We know it's been very volatile on the way there, so it's going to be interesting to see how that sort of shapes up as we get into maybe a little bit of heavier volume next week in earnings season. And then Brent, of course, keeping an eye on what's going on with commodities. Brent higher by about 4.4%. Just below $88 a barrel. Meanwhile, you take a look at some of the day's biggest individual movers on the stock level. Apple higher by about 0.1%, neck and neck with Nvidia for the world's most valuable company. Both of them with market caps just below about $5 trillion. SpaceX officially erasing over $1 trillion in market value from its own peak, down about 5.4% today. And Netflix finishing this Friday lower by about 7.3% after their report yesterday. Well, let's get to our top story this hour, and it's a fun one because as the World Cup heads into its final weekend, the business of soccer is reaching new heights. We'll break down the numbers driving the tournament, from record-setting viewership and the billions of dollars wagered on the matches to weather challenges, testing organizers and the brands that won big on the world's biggest stage. Now, for this special edition of The Close, Business of the World Cup, I'm joined by none other than Randall Williams. He is Bloomberg's senior sports reporter, also the co-host of the Business of Sports podcast. And man, I mean, you think about the NBA Finals, the World Cups. I mean, what a summer you must be having.
It has been a summer. I can't tell you really where I was 3-4 days ago. People are asking me, like, did you go here? Did you go there? And I don't know. I was in Las Vegas a couple days ago, but I can't tell you what day I returned.
Mm-hmm. Well, on Sunday, I know that you're gearing up to be at the New York, New Jersey stadium.
You're not calling it MetLife.
I don't know what I'm supposed to do at this point. It's MetLife to me and probably to everyone else watching right now. But talk to us about the matchup, and the anticipation behind seeing Argentina versus Spain.
I mean, if you're Adidas, you couldn't have asked for anything more. You have Lionel Messi, who has been your biggest athlete over the last 20 years, and then you have Lamine Yamal, who is basically a prodigy in some aspect, and then of course there's so many different storylines. Of course, Messi played for Barcelona, which is in Spain. If you're a Spaniard, it has to be sort of gut-wrenching because you're rooting for your team, but Messi was your hero for so many years. And so this is probably one of the most expensive sporting events that I think.
Yeah.
I'm looking at, the Game Time app right now. There's a $34,000 ticket. The cheapest ticket is $8,379. And there are so many different things you could spend that money on. So it is incredible.
Yeah, and the thing is, it's high prices, and it's not just an American audience, too. You think about all the people from around the globe who have traveled here. It's going to be interesting to see the breakdown between international fans and locals, if you want to call them that.
Yeah, I think a good portion of the Americans that'll attend will either be celebrities or corporate sponsors. And then I think the Argentinians will travel incredibly well. I mean, we were in the office when Argentina played England, and you could hear on the broadcast, the crowd roaring unlike anything that I've heard outside of when the Falcons are playing at Mercedes-Benz Stadium. And so I think that the Argentinians are going to take over, but who knows if that's going to translate onto the field.
Yeah, well, I live in Hoboken. I'm going to be interested to see if I can hear the cheering from there. But
you'll hear the partying.
Yeah, that's right, too. Yeah, Hoboken's going to be rocking. But joining us now, I'm pleased to say, is the man on the call for 14 of the tournament's matchups. His name is Andrés Cantor. He is Telemundo's play-by-play announcer. Of course, your voice, sir, is famous. I'm not going to imitate the goal, but everyone knows it. This is your 10th World Cup tournament that you're calling matches for. It's your 11th that you've covered as a reporter. Talk to us just about how the experience has been, because, again, you've called 14 of the matches so far, and I know that Sunday is going to be a big day as well.
It's going to be a very big day, Katie, but before, can you buy me those $38,000 seats I need to?
If I do that,
category 1. That is how crazy this final of the World Cup has been. I mean, we have the best two teams in the tournament, the two best teams in the world. The European champion, the South American champions, all the storylines. Right. You just went through them. Messi against Lamine Yamal. Argentina defending the world title in back-to-back finals. It doesn't get any better than this.
So I'm very curious, I mean, what do the next few days look like for you? Because there was reporting by USA Today that you nearly lost your voice on Argentina's winning goal versus England. So how do you sort of prep for an event like that, which, I have to imagine millions, potentially billions of people will be watching?
Yes, there's obviously a lot of pressure. We've been having record ratings in Telemundo and Peacock in Spanish, and we expect that this final will break all records, so I know the responsibility that I will have on the call. So tomorrow I'll probably call it a day around 4 p.m. Just lock myself in my hotel room, prepare the last notes. I already have pretty much the game prepared because I know the team so well. And it's going to be a very even final. To put it in your terms, it's like kind of Apple and Nvidia going head-to-head, Spain and Argentina.
Now I get it.
So I want to ask you, this World Cup is unique in being that it's the second time America, and really North America, has hosted this. What have you seen and the difference between the 1994 World Cup and the 2026 one?
Well, the fandom, definitely. I remember when we did the 1994 World Cup, soccer was kind of a novelty for many of the people that went to the stadium. Now we have record attendance numbers. More than 6.5 million people watch the games. They're all very soccer savvy. They came from all over the world. They came from all over the United States to follow their team. So obviously soccer fandom in this country is alive and well. This is a soccer nation. We don't need to compare soccer to any of the other leagues. Soccer is doing fine with MLS, and it's 30 teams with the U.S. national team program, both men's and women's. So it's been a great summer for soccer in our country.
Calling 14 matches during this World Cup, which city that you traveled to had the biggest crowd presence where you were like, I can't even hear myself think? I hope that the broadcast is going through. Which city had the most aura?
I would say I was very impressed with Seattle.
Oh, wow.
For the U.S. national team games. I was like you. Like I woke up one day, every other day and said, where am I? What game do I have ahead of me? But Seattle impressed me. LA, I mean, really all of them. I can't just pinpoint one because I was fortunate enough to be in all three countries, 2 Mexican cities in Vancouver, and the only city I haven't gone to in the U.S. is Boston, but all of them were absolutely great hosts for this World Cup.
And of course, you work with Telemundo, and what's really been interesting about this World Cup is that a lot of English speakers are watching Telemundo. They're watching.
I mean, he's there.
Yeah,
it's about him.
Obviously, you're a huge draw, but I wonder what that sort of says to you. I mean, does that surprise you that again, it's English speakers who are choosing that this is where they want to watch their World Cup coverage?
You want to be my agent? Thank you. I'm not surprised this happened before, but it's happening in more numbers perhaps now because people are find that not only myself but all the other colleagues that work for Telemundo Sports have done a terrific job in their play-by-play with the same enthusiasm and the same goal calls and this and that. So I think we have a passion for the game that is unparalleled to none. It's not a question. It's a question of styles. I respect so much, the English language broadcast on our competitor. But, we have a different feel for the game. We're very passionate. Latin Americans are very passionate. We have this sense of craziness for football, for soccer, and that transcends on the screen. And we're very, very grateful that we're pulling the numbers that we're pulling also from the English dominant side of things.
And so I believe that you have watched more Lionel Messi football in person probably than Katie and I have combined because I've never been to a match. Katie, have you watched Lionel Messi?
No, not in person.
More than both of us combined, what is it like to witness someone like that on the pitch, to see him do the things that he's doing at 39 years old, and to have a chance for Argentina to defend their title, which is something we almost never see?
Yeah, it is incredible because we thought before the World Cup that he was going to play a special role this time around. It took him 5 tries to win the World Cup in 2022. That was his 5th World Cup. Now he's playing in a record-breaking 6th World Cup. And we thought he was going to play, maybe coming off the bench, he was going to play for an hour because, he's 39. In soccer terms, that is a lot. That is being old. And yet he has proven time and again that he's the GOAT. He's the best of all times. He's the goal scorer, leading assister. He plays every single minute. And the other day against England, when he crosses the ball with his right foot, which is not his dominant left, he broke 2 English defenders that were 19 and 21 years old. And they were looking at him like saying, what? And he went to the right.
Was devastated.
Yeah.
Everyone here was devastated.
He's just great. He doesn't need to win a 2nd World Cup, but obviously if he does, this group of Argentinian players and Messi will be forever remembered as the greatest team ever in the history of the sport.
Wow.
Well, not much longer to wait to see if, they'll be able to get it done on Sunday. Andrés, so cool to have you in studio with us. Really appreciate you making the time. That is Andrés Cantor. He is Telemundo's play-by-play announcer. And really interesting to hear that Seattle in particular was absolutely rocking.
Yeah, I think. But also, I'm sort of unsurprised because of just the atmosphere of the Seahawks. If you listen to anybody who's been to a Seahawks game, they often say that they are known as the 12th man. And so I think that from that perspective, it is no surprise that that stadium was probably roaring.
Yeah, absolutely. Well, we're definitely also going to get into the numbers when it comes to the bets that were being wagered on some of those games. But coming up next, we're going to track the FIFA windfall with Alex Lasry. He is the CEO of the New York, New Jersey host committee for the FIFA World Cup 2026. He'll join us to talk about that economic impact. That's next. This is The Close on Bloomberg. Well, the 2026 FIFA World Cup final kicks off in just under 48 hours, hosted at the New York, New Jersey Stadium. You might know it as MetLife. We sat down earlier with Alex Lasry. He is CEO of the New York, New Jersey host committee for the FIFA World Cup 2026 to discuss the ripple effects of the tournament on the region. Here's part of that conversation.
The next few days are all about just making sure that we're, ready for what is kind of its own animal, an own singular event. The World Cup final is going to be probably the largest event in human history. We're going to have billions of people watching, whether it's inside the stadium, where we're expecting a full sellout. We're going to have, this is basically going to be a mini United Nations mixed with the Oscars. And so for us, we had a very successful first 7 games. We don't need to recreate the wheel, but we do need to kind of work under the new parameters, that is all these heads of state, celebrities, VIPs, and the final, which is going to be viewed by billions of people.
And Alex, I have to admit, the last time you were here, I gave you a lot of grief about the traffic situation since I live in Hoboken. I was really worried about what just that area in New Jersey would look like. But I have to say, it hasn't impacted my life that much. And I feel like the public transit aspect of it has maybe gone a little bit better than the broader public expected.
I think the way that this worked, and one of the things that we always tried to tell people was, this is what we do, right? The United States is experts at putting on massive events, right? We sell out MetLife Stadium every weekend. We've done plenty of events there. We've done a Taylor Swift concert, and they all go fine. I think for the World Cup, it's bigger in scale and scope, but at the end of the day, it's a sold-out event at MetLife Stadium, and this is, I think, one of the lessons from this World Cup. And as we head into this decade of sports, is the United States are experts at putting on big events, and we really need to lean into that expertise. And I think what we've seen for us on our logistics, 97% of fans were scanned in before kickoff, and everyone was off property in 2.5 hours. So a real win for us, and I think we've set the standard for what these mega events are supposed to look like.
Let's talk tickets for a second. Often Super Bowls hold the most expensive tickets. I think it was the Super Bowl in Las Vegas, and then other ones as well. I think that the FIFA 2026 Men's World Cup final could come pretty close to topping the average most expensive ticket ever sold. What do you think?
I think when you're looking at these, big mega events, whether it's the Olympics, Super Bowl, World Cup, you're just seeing the demand for these in real life experiences getting higher and higher. And they're becoming a bigger and bigger event with more and more that's happening, whether it's outside hospitality or inside the game with the opening and closing ceremonies and halftime show. So these events are just becoming bigger and bigger, and the demand for wanting to be there and be a part of it is also becoming greater. I think for us, what we really wanted to do was, one, make sure that this was accessible as much as possible. So, we're giving 40 free tickets to the finals, 20 for New Jersey fans, 20 to New York. We've also got our watch parties, which again are these massive experiences, whether it's at Central Park, Rock Center, all across New York and New Jersey, that are all free. And so whether you're inside or outside the stadium, we want to make sure that you're able to watch the World Cup, be a part of the experience, and have an incredible time.
Yeah, I mean, it's really been an insane couple of weeks and months here for New York. But I do want to ask, as we were talking about, I mean, the anticipation for this matchup on Sunday is huge. This is truly a global game. What sense do you have about what the breakdown might look like on Sunday when it comes to international fans versus American fans?
So we've been tracking, I think, for the entire World Cup. It's been about 50% international and 50% domestic, with about 20% of that being local. So 30% the entire rest of the U.S. and about 20% New York, New Jersey, which matches up with what our expectations would have been. We're seeing room rates year over year exceeding what they were last year, and we're seeing occupancy year over year exceeding what it was last year. So the World Cup has brought a pretty massive economic impact. We've done an interim economic impact report just covering the group stage, and we saw over $2 billion of economic impact just from the group stage, with over $1 billion of direct consumer spending, hundreds of millions of dollars already in direct tax revenue for the region. So this has already, just for the 3 weeks in June, provided a massive economic impact and on pace to actually break what our projections were, which was over $3 billion.
And our thanks again to Alex Lasry. He is the CEO of the NYNJ host committee for the 2026 FIFA World Cup. And, we were talking with him about how the traffic hasn't been that bad. I'm, a very selfish perspective here. I just don't want my life to be impacted too much. But we've learned that President Donald Trump is going to be at the finals, so it might be a little bit more difficult on Sunday.
Yeah, I think leaving MetLife Stadium is going to be absolutely insane. It's just, whenever he attends an event, whether it be the World Cup final, whether it be NBA Finals Game 3, the Super Bowl, everything, it just heightens security. And I think that going there will be fine so long as you get there early. But leaving is going to be completely different. Yeah,
when everyone tries to leave at once, well, it'll be fun to see what that means, especially for people driving by, which is what I often do. But in any case, coming up, we're going to talk about how the world's biggest sporting event also became one of the biggest betting events. A conversation coming up with Adam Greenblatt. He is the CEO of BetMGM. This is The Close on Bloomberg. Well, the World Cup final set to boost U.S. sports books. The team over at Bloomberg Intelligence crunching the numbers, noting that operators like DraftKings, FanDuel, and BetMGM could be set for a moderate boost to the third quarter if underdog Argentina defeats Spain. Let's discuss with Adam Greenblatt. He is BetMGM CEO. He joins us now as we head into this weekend's big matchup. And Adam, we were just talking with Andrés Cantor. He, of course, is the famous play-by-play commentator for Telemundo. And he said that it was the Seattle games that really impressed him when it comes to the fan presence. I'm taking a look at some of the stats you sent over, and it was the U.S.-Belgium game in Seattle, actually, that was your most bet on soccer match ever. Talk to us a little bit about what you're seeing when it comes to some of these specific matchups.
Yes, absolutely. Well, in aggregate, the World Cup has dramatically exceeded our expectations. I think there's a theme here, listening to the previous segments as well, exceeding expectations and breaking records. And BetMGM was no exception. This tournament has been the most bet World Cup in BetMGM history. Overall volume for BetMGM has tripled, and that's not, you heard that right, 3x compared with the 2022 World Cup, and it keeps going. We've got two more games ahead. The Argentina-Spain matchup for the final is really capturing the bettor's imagination. And so I guess the question for us is why. And from our perspective, there are several factors why it has become such a successful betting event and so far ahead of 2022. And that's, I think, partly as a result of the expanded tournament format. So we have more betting content, so more games, a broader range of betting markets. So what we are offering our bettors is much wider. And we're also following with betting opportunities the player storylines that bettors have really got behind. Of course, our TAM has expanded since 2022 as well. And the fact that it's a tournament on our home soil has made all the difference. The games are at the right time, and you heard the viewing public and the support for soccer is at unprecedented levels.
Adam, every betting person that I've spoken with has been thrilled that this is the final. I wonder, what was your immediate reaction when France and England lost earlier this week?
I got on my knees, I looked up at the heavens above, and I said, thank you. That was, the fact that France was knocked out and isn't a finalist contender, that was gold for the sportsbooks.
And, it's funny, you mentioned that since 2022 that your TAM has expanded, your total addressable market, but so too have your competitors, because, you have the likes of the other sports books, you have the FanDuels of the world that you're competing with, but now you also have prediction markets, which have really just entered the public consciousness in the past few years or so. So how do you position BetMGM to sort of stay front of mind for these bettors looking someplace to place these bets?
There's no doubt the competitive environment is fierce, but it's been fierce since the beginning. We're focused at BetMGM. We're focused on our how we win strategy, the BetMGM strategy, which frankly is creating legendary experiences, both in person and in app. So that omni-channel strategy is very much central to BetMGM. And we cut through during the tournament with what we think some really innovative offerings to our players. We started with what we call the goal rush giveaway, where for every goal the US team scored, we would give our bettors who participated $500,000. And so when the tournament started, and the tournament opener against Paraguay, where the USA scored 4 goals, it had me worried. Worried about what was to come. But overall, we awarded $5.5 million to our players in bonus bets. So that was one of the areas. We also had a two-up early payout promotion, whereby if your team is up by 2 goals, regardless of the outcome, you get paid. We also teamed up with one of our partners, Marriott Bonvoy, on something called the SI Beyond the Pitch sweepstakes. And just this weekend coming up, actually, the winners of this sweepstake get to attend the SI Beyond the Pitch party right here in New York, which is this weekend, as I said. And this is always a who's who of the biggest names in sports and entertainment. Now, of course, given our relationship with MGM Resorts, we've put on watch parties and activations all around the country at MGM properties. We also have one of our partners, one of our brand ambassadors, is the soccer icon Tim Howard. And so we've launched a Tim Howard casino game as part of the tournament activation. We also sent, it was a bit of fun, we sent Tim undercover at a bar in Chicago and created some social media vignette that has really gone viral. We've had millions of views, so really pleased about that too. So we've come at it at the, you know, in the way that BetMGM does, consistent with our strategy.
Adam, I wonder from your perspective, what I hear a lot is that when the fans love the Titans to compete, so we saw France, England, Spain, and of course Argentina in the semifinal, but we did not see as many underdogs. How does that fare for the sports books when the top ranking teams are ultimately the ones finishing? Is that good? Is that bad? What are you seeing from bettors in terms of how that forecasts for your company?
Of course. Look, our product at the end of the day is an entertainment product. It's an emotional product. Our players follow their hearts most oftentimes. And so the favorites are favorites because of their global fandom. And so that reflects in the betting. So in the early stages of the tournament, where the favorites were winning consistently, I'll be honest, the engagement was incredibly high. We saw record bet volume. In fact, the US-Belgium game, the number of bets we took in that USA-Belgium game was more than any NBA Finals game ever.
Wow.
Any Stanley Cup Finals game and any World Series game. Now, of course, NFL is king and the Super Bowl is still king, and we took 8 times more bets on the Super Bowl than on that game.
That's crazy.
But what this is telling us is that soccer is on the map. And to your previous question, yes, when the favorites win, generally speaking, that's bad for the sports book. But when we have very high profile upsets like France's departure, you know, in the end, we should, in theory, achieve our theoretical margin.
All right, Adam, such an interesting conversation. It's certainly going to be an interesting weekend as well. Appreciate you making time for us. That is Adam Greenblatt. He is the CEO of BetMGM. A lot of focus, of course, on the match itself, but Global Citizen is also producing the first ever halftime show for the FIFA World Cup final, featuring Madonna, Shakira, Justin Bieber, BTS, and the show is curated by none other than Coldplay's Chris Martin. We spoke with Global Citizen CEO Hugh Evans in the lead up to this historic event. Let's take a listen now.
This is an extraordinary event. For the first ever FIFA World Cup halftime show, it really is poised to be the single largest lineup for a cause since Live Aid. You know, you're talking about Chris Martin from Coldplay curated the whole thing, and he brought together BTS, Justin Bieber, Madonna, Shakira with Burna Boy, the PS22 Choir with Coldplay, Gustavo Dudamel with the New York Philharmonic and the Simon Bolivar Orchestra. This lineup represents every continent on the planet except for Antarctica and is truly this amazing moment of unity for the whole planet.
What is is there a theme that ties all of this together, that all of the artists obviously are performing different songs, but I assume there has to be some thread?
There is a really powerful theme, and this is the vision of Chris Martin. You know, the theme is unity and love. And then the impact we want to have is we set ourselves this ambitious goal of raising over $100 million for the FIFA Global Citizen Education Fund. This is a fund we set up to focus on grassroots literacy all around the world, because we knew that this was a once-in-a-generation opportunity when you had 1.5 billion people around the whole planet tuning in at this moment. If we could use this as a moment to raise $100 million, we could give out grants to community organizations all over the world.
So is the idea people will be exposed to this and they'll be able to donate in the moment, or is this coming after the event's over?
Well, $1 from every ticket to the entire World Cup goes to the FIFA Global Citizen Education Fund. Shakira, The Weeknd, Usher all gave $1 from their tour in support of the Education Fund. The private sector stepped up, so Bank of America, Cisco, MetLife all stepped up, Live Nation, they all contributed. And it's just been growing from there. We got a commitment today from Canada of $5 million to support the FIFA Global Citizen Education Fund. And then other governments are starting to step up. And I'm proud to be able to tell you today that as of today, literally a few hours ago, we hit over $60 million raised for the FIFA Global Citizen Education Fund.
Just from this event.
Yes.
Wow.
Yes.
So that's a lot of money.
Yes.
Give me a sense here. I mean, obviously people will look at this and they'll say, okay, where exactly does that money get deployed? Overall, I understand what you're doing. What is the specifics?
The specifics are really important. So we set up a board of the FIFA Global Citizen Education Fund. I'm on the board, Gianni Infantino, together with Hugh Jackman, together with Serena Williams, together with Kaká, Ivanka Trump, a range of board members who are all contributing to this effort. Shakira's on the board. And we meet all the time and we sift through thousands of applications that have come in from grassroots organizations over the world. And then we work with an independent auditor to make sure that we can track every single dollar.
And our thanks again to Global Citizen CEO Hugh Evans. Now, coming up, the business of soccer and its growing foothold here in the United States. We'll discuss with Mark Wilf. He is owner of the Minnesota Vikings and the Orlando City Soccer Club. This is The Close on Bloomberg. Sunday's World Cup final set to shatter viewership records as Spain and Argentina duke it out for the title. We got a chance to sit down with Minnesota Vikings owner and president Mark Wilf. He's also the owner and chairman at Orlando City SC and Orlando Pride to talk more about FIFA's influence on soccer fandom in the U.S. Take a listen.
The excitement has been palpable for the last 5 weeks. A lot of lack of sleep from all the fans watching it. And I just think the excitement, the foundation that's been built here is something that's going to take MLS and soccer viewership in the United States to a new level. So whether that's the incredible venues we've had, the communities, the watch parties, just in Orlando alone, we had 65,000 people come to our watch parties. So just seeing every time the success of the U.S. soccer team, the run they had, and all of it is just great passion, great excitement for the game.
I am curious just about the impact here on New York, and obviously you are more or less a local guy, even though obviously your business interests are elsewhere. I mean, this has been a huge impact economically for the New York, New Jersey region, and obviously for the other cities as well, like Kansas City, Seattle, et cetera. Give me a sense here as to how that translates into other economic opportunities going forward. A lot of foreigners came here to these various cities, and they got a taste of America in a way that maybe they wouldn't have if the World Cup hadn't been here.
Well, I think the world's taken notice that the U.S. is a great place to do business, North America, all the excitement. And I think hopefully FIFA will put us on the map for another World Cup sooner than later. And just the economic impact of the entire world coming here and seeing how open, and particularly the United States, just how open and welcoming the United States and North America is in terms of fandom, excitement, and passion. And I think that goes for players too. We in Orlando, for instance, just signed Antoine Griezmann, a world champion with France, someone who's everyone in the world knows. And players like that now want to come to MLS, come to the United States. And I know our fans, we're going to leap off of this, and MLS is launching tonight their season again. And so I think there will be a lot of passion and excitement from what you see out there, and we'll roll into the seasons ahead.
I do want to talk a little bit more about that halo effect. I mean, you mentioned Griezmann, for example, signing on. I mean, realistically, how much more of that type of activity might we see? You know, the fact being able to attract that sort of a talent to U.S. teams.
I think it's going to help a lot. I think the type of ownership we have, for instance, in Major League Soccer. Just remember, in 1994, that World Cup led to the creation of Major League Soccer. And just to think, 4 years ago at the World Cup, there were 7 MLS players that played in the World Cup. And this go around 45 players. So that's a testament to the level of play we have, the level of the league we have, and it's growing dramatically. And soccer viewership is and passion comes with great moments. And there have been a lot of great moments in this World Cup. And it's not just the great fan things you see with the Norwegian rowing and all the rest. It's great plays, great excitement, and young people coming out to the stadiums, best venues in the world that we have, and seeing great soccer.
And our thanks again to Mark Wilf. He is the owner and president of the Minnesota Vikings, also owner and chairman at Orlando City SC and Orlando Pride. Now, still ahead, more on the growing fan base for soccer here in the United States. We'll catch up with New York City FC CEO Brad Sims on where he's seeing the biggest impact. This is Bloomberg. Well, the ball is officially rolling for the FIFA World Cup final, kicking off at New York, New Jersey Stadium, also known as MetLife, on Sunday. No matter what you call it, it's a huge moment for U.S. soccer, with our next guest planning to open New York City's first ever soccer-specific stadium in 2027. Here's part of our conversation with Brad Sims. He is the CEO of New York City FC to talk about how this impacts New York sports.
First of all, New York is a soccer city. It has been for a long time. I think it's now getting its due. I mean, every game at MetLife has been sold out, and you got 80,000 packed fans for 7 games and counting. We'll have an eighth full house here on Sunday, and it's been amazing to see the city just unite around the sport. I mean, this is a world city. We say in soccer and football, it's the world sport. So no better place to have a World Cup final, in my opinion, than here in the New York City area. So it's been amazing to see fans from all over. And by the way, lots of new fans that are really seeing the power of the sport of soccer and couldn't be more excited about it. So it's amazing for the sport. All of that is great, I think, for Major League Soccer, for New York City FC, as more soccer fans, more interest, more people talking about soccer, more people thinking about soccer, more people going to soccer games, watching soccer games is better for us.
Well, go back then. I mean, we talk about the MLS and its founding, kind of riding the coattails of that 1994 FIFA World Cup, which really obviously captivated a lot of folks here in the United States. When you think about the maturity of this league right now, and for that matter, the maturity of New York FC, how much of a bump does a World Cup being played here in the U.S. and North America actually bring in new fans to the sport?
Yeah, we think it's going to be massive. I mean, this is like rocket fuel to our league, to our sport, to our club here in New York. It's amazing the impact that, like you said, the '94 World Cup had. I mean, that spawned an entire league, and now we're here 30 plus years later that and we have one of the strongest leagues in the world. I mean, Major League Soccer over the last 2 years is the second highest attended league in the world, only behind the English Premier League in terms of actual attendance at games. And so it's incredible how the sport has been taken on in this country. But this World Cup is taking everything to a completely different level, and we definitely are already seeing positive impacts of that. But the league is coming back, this weekend or the next 2 nights. MLS is back, and it's going to be for us, we're going to see a ton of positive momentum, and selfishly and we're fortunate in New York City to be launching the first ever soccer-specific stadium in the 5 boroughs of New York City in 2027 with Etihad Park. So for us, the timing couldn't be more perfect.
And that was Brad Sims. He is the CEO of New York City FC. Here to count us down to the final weekend of the World Cup is Vanessa Perdomo. She is Bloomberg Business of Sports co-host. I'm also still joined by Randall Williams sitting by my side here. So all I want to talk about right now is the weather, because the air is poisonous in New York right now. I'm only slightly exaggerating. It's very unhealthy because we have all the Canadian wildfire smoke sort of engulfing our city. So, Vanessa, how does that sort of set us up for this match, given that, I mean, by many measures, it's unhealthy to breathe right now?
It's definitely not healthy to breathe right now, but it doesn't really pose a problem for FIFA other than optics, really, because they're not going to change the game. The World Cup final is going to be played at 3 p.m. on Sunday, and I don't think that they obviously have things in place where if the AQI got up to 200 or something like that, then they would probably have some sort of way to push the game back, maybe to Monday or something like that. But as of right now, it doesn't look like it would be that poisonous, as you say. I think they're going to have the game no matter what.
Yeah, it's interesting. We know that President Donald Trump will be attending the game on Sunday. Apparently, he's planning to speak with Canadian Prime Minister Mark Carney to, quote, find out what they are going to do about it. So I look forward to that conclusion there. But Vanessa, something Randall and I were talking about earlier in the show was, Adidas really feels like they're the big winner here.
They're the huge winner. They actually can't lose. Argentina and Spain, they obviously outfit them both for the games. But I think that, and we were talking about this before, Randall, I do think that Messi and Argentina probably would be the bigger win for them because his last World Cup, potentially, and if that, jersey then becomes really valuable on any sort of secondary market, but even for their own resale.
And what I'd add to that is that, of course, Lamine Yamal is a global icon just waiting to boom, but we're still waiting. He has not had a moment at the World Cup yet, whereas Messi is a leading candidate for the Golden Boot, which is the highest goal scorer of the tournament. And so with that in mind, if Messi comes out and does the exact same thing he did the last match against England, which was have 2 assists, Adidas can just say, this is our golden guy. I think Lamine Yamal, of course, would have to have a similar type of match that Kylian Mbappe had at the 2022 World Cup Finals, which was a hat trick. We've only seen a couple of those ever.
All right, guys. Well, it's going to be fascinating to see how it all plays out. Argentina versus Spain on Sunday. Really appreciate you both joining us. That is Bloomberg Business of Sports co-host Vanessa Perdomo, as well as Randall Williams. Thank you so much for joining me this hour, helping me with all the sports conversations for our special coverage of the World Cup. For all of your political coverage, Balance of Power is coming up next. But that does it for us here on The Close. Have a fantastic weekend. This is Bloomberg.